Hello and welcome to Ticker Tapes. It's Monday, so that means FAANGs are on the agenda again. We saw the end of the month, the second quarter, and first half of the year last week, none of which have been particularly kind to the FAANG stocks. The table below captures their performance. The year-to-date percentage change column tells us all we need to know about the current attitude of investors towards these flagship stocks. We know there are question marks over Netflix and Meta and their prospects, but it says a lot when Apple, the world's second largest listed company, is down 23.4% since the start of the year. The iPad and iPhone maker may get a chance to redeem itself when it reports earnings on July 28th. Wall Street analysts are looking for EPS of $1.14, well below the $1.52 reported in Q1 2022 and the $1.30 of earnings in the second quarter of 2021. The word is that Apple has been forced to delay the deployment of its in-house 5G modem or baseband technology and will instead continue to rely on Qualcomm to supply these components, which will appear in the new 5G handsets from Apple that are likely to appear in the late summer of 2023. Brokers Wedbush believe that iPhone demand is holding up well despite numerous COVID shutdowns in China. Wedbush believes the supply side issues are well known to investors who will look past the current quarter, turning instead to September and December data and the launch of the iPhone 14. JP Morgan cut its price target on Meta platforms from $275 to $225. The markdown was part of a sweeping review of 26 companies under the bank's coverage. Analysts cited economic pressures, currency moves, and company-specific dynamics for the price cuts, saying that the overall macro environment has deteriorated since Q1 earnings, with inflation reaching a 40-year high in May, fuel costs up 45% since early February, and Chase credit card data indicating slowing consumer spending and lower consumer confidence. Meanwhile, the Financial Times reports that Meta is facing a backlash over charges levied on apps in the company's VR app store, apps that developers built specifically to run on Meta's VR headsets. It seems that Meta wants to keep 30% of the purchase price of an app and between 15 and 30% of any subscription revenue. Meta had previously said that it wouldn't make the same mistakes seen in smartphone app stores, though it did point out that customers will be able to download apps for its headsets outside of the VR app store. Morgan Stanley published research on Thursday on Netflix's biggest rival, Walt Disney. The note looked at where Disney's earnings will come from going forward and determined that it would be parks and experiences and not the Disney Plus streaming services that will generate the majority of revenues. The investment bank trimmed its estimates for both customer numbers and earnings at the streaming division to take account of lost broadcasting rights and slowing consumer spending. Disney traded down by 2.5%, whilst Netflix was down by 3.2% on the day and by 6% over the week.